Well, after yesterday's positive news on the housing front, today's re-benchmarking of existing home sales is providing people with a bit of a reality check. That's according to Bloomberg economist Joe Brusuelas, and he joins me now to discuss today's revision by the National Association of Realtors. Welcome back to Bottom Line. What's this all about?
Well, what it is the National Association of Realtors is better aligning its data with the 2010 census. There were some issues with multiple listing services across the country, and they were having an aggregate problem in estimating sales. Unfortunately, what happened is that they overshot it by roughly 14%. So we got a vastly different reality.
Joe, how's that possible? 14%? How is that possible?
Well, that's been one of the questions today, but it's a difficult process in measuring aggregate data in a $14 trillion continental economy. Unfortunately, they just didn't get it right. And what we have is a vastly different reality in terms of the existing home sales market. Slower sales, much weaker recovery out of the recession.
So what does it mean for the pace of stabilization in the housing market?
Well, the stabilization is very tenuous at this point, and what it tells me is we've got a longer ways to go to dig out of the hole that we found ourselves in after the bursting of the housing bubble.
We were talking yesterday concerning what's going on with construction of apartments. That's starting to take off because it's the second option, maybe the best option for a lot of people who have lost their jobs and find themselves not able to pay their mortgage.
Well, let's talk about that a little bit because that's incredibly important. I think the function of the increase in rise of construction on multifamily dwellings is due to households transitioning from ownership to renters. We have this incredible wave of foreclosures that's still working its way through the market. And during the boom, we built roughly about 4 times as many single-family residences as we did multifamily dwellings. Thus, there's a little bit of a shortage of supply, and as there's been an increase in demand, the residential speculative community has moved into this market, and they're finding a little bit of profitable activity. We don't want to get ahead of ourselves, though.
Yeah.
The increase in starts has little to do with single-family residences and demand for the SFRs. It's located almost exclusively in multifamily dwellings. Thus, when we saw this data this morning, what this tells us is there's likely not to be the beginning of a more robust recovery in the housing market in 2012. That's a 2013 or 2014
but
story.
is it at least going to be better?
We're going to see starts better. We will likely, hopefully, we see home prices bottom mid-year. Just a simple wave of foreclosures and the looming shadow inventory tend to suggest that we're going to see prices fall through the middle of next year. You know, when you get a foreclosed home that works its way into the market, it traditionally enters the market at a 20% discount.
Yeah.
That there in and of itself will put downward movement on housing prices. Thus, when we get through it, we're at the end of 2012, things will be a little better, but not really where they need to be.
Joe, talk to us about the ripple effect on all of this and what housing has done to this economy, because you're talking about construction jobs, you're talking about plumbing jobs, you're talking about every possible thing, some person of skilled labor to build a home, and that ripple effect has been the only word I can think to use is catastrophic.
Well, housing economists use a word called spatial lock-in.
Yes.
Where individuals who've got negative equity on their homes can't sell them and move to the areas of the country where there are jobs. So if you're a construction worker or an oil worker and you live, let's say, in Tampa, Florida, and your home's underwater, you can't sell that home and move to North Dakota where there's real work for you.
Yeah.
That's a real problem, and it's causing a disruption, or slowing rather, in the adjustment in the housing market and the broader overall economy. It's one of the reasons why we do see a reportage in some areas of the economy. They're having a difficult time finding qualified workers.
It's a real ugly cycle. Joe Brusuelas, Bloomberg's economist, joining us. Joe, thanks for your help this year. Appreciate it.
You got it. Have
Thanks
a good
so
New Year.
much. You too.